Everybody to our next lunchtime live. Hope you're all doing fine and dandy. So we're looking at transfer pricing today. It will only be about 10-15 minutes maximum. Okay, we're going to go through one question. We're going to talk about the objectives of transfer pricing. Really important. Okay, let us begin. So, as we know, transfer pricing is when you've got two divisions, two departments, and one is selling to the other, and we need to decide how much. Okay, so what you've got to think in the exam is that transfer pricing is ACE. That will help a little bit. So A, C, E. They're the objectives of transfer pricing. So A stands for an autonomous decision. So Department A and Department B feel like they're making an autonomous just means a decision by yourself on your own. C, that the transfer price that we charge means that we work in the same way as the business as a whole. So any transfer price makes Department A do well, makes Department B do well, but overall it makes the company do well as well. So everybody's goals are congruent. And E is all about evaluation of performance. So it's a fair price, so we can judge Department A correctly or Department B correctly because we're charging a fair price. Okay, so they're the three things to remember. Simple as that. What I thought I'd do is just go into a little bit more detail on them. Do you think the following? That an autonomous decision, the A in ACE, means that divisions should be able to set any price they like because it's autonomous. And obviously the answer to that is no, you can't just set anything you like, because if you did, well, Department A and Department B would never agree because one's selling and one's buying. So that's not really what an autonomous decision is about. And that's what the examiner says is what most people think autonomy is about. Where actually what it's about is giving them as much autonomy as possible. So the transfer pricing should be promoting the autonomy of the two decisions. That's true. But moreover, they should be motivated to improve their performance because they feel they're having some say in the transfer price. So it's kind of like a little bit of autonomy at least, but we've got to be careful with autonomy because it leads to self-interest. Department A starts charging a massive amount. If they start charging a massive amount, it's not going to work for Department B. Everyone's, like you'll see in this question, everyone starts fighting, it doesn't work. So head office should always keep some authority over the transfer price. Don't let the autonomy get out of hand, basically. Okay, congruent goals, as we've talked about already, align the interest of the division with the business as a whole. Pretty straightforward, really. And then finally, evaluation of performance. Oh no, congruent goals still. Encourages the divisions to transfer price at the business's overall profits. Yes, obviously, just what he's saying is you set a transfer price that makes sure that the business as overall makes a profit. Sorry, getting ahead of myself there a little bit. E, evaluation of performance. C, so the divisions say the transfer price is a fair price. That's often from the external market because if that's what's being charged externally, that's often a fair commercial price. So, and you want it to be fair because you're going to be judged. And because you're going to be judged, well, you know, you've got to have a fair price. So, 5 minutes gone. Now we're into the actual question. Give me a second. Excuse me while I have a little drink. So this was from December 24. And it says, as a result of a recent and significant increase in price of the inverters is what we're selling, and Department J is selling to Department D. There's been a real price, so we say, look, an external price from a third-party supplier, it's really going up. So therefore, we're now looking at buying not externally, but buy-in from Department J. So they should instead buy all the inverters from Department J. And J says has spare production capacity. Now, they must be telling you that for a reason. You think then, if you own a factory or department and you've got some spare capacity, you've got to think, right, how much costs do I have to cover to allow this to be a fair price that I receive? It's about your evaluation of performance, because it's about a fair price. But what I want you to think of is, what costs should J cover if it has spare production? Should it cover its fixed costs and its variable costs? Have a think about it. Remember, its fixed costs are fixed, its variable aren't fixed, and it's got spare production capacity. So therefore, if you think about it, they should only be covering their fixed costs. Sorry, they should only be covering, in terms of the transfer price, the variable costs, because the fixed costs are fixed. They've already been paid for. So if there's this new extra money coming in, new extra orders coming in, and we've got spare capacity to make it, then it's just the extra costs, the extra variable costs only. That would be the fair price for an evaluation of performance. So the question went on to say, a proposal for T division to buy inverters from J division on a temporary basis has been tried before, several years ago. Okay, how did that work out? It says the managers of the two divisions were unable to agree. So they're unable to agree. Why is that? And it says this distracted them from the day-to-day running of the divisions. So it's linked to giving them too much autonomy, and it's distracting them from day to day. So the goal congruence is wrong as well. So they didn't have, they were given too much autonomy and they couldn't agree. So we know that autonomy doesn't work all the time. So your answer would say divisional autonomy is important to maintain the motivation of the managers. We agree that they want to feel they have some say, but we don't want it to be like it said in the scenario, head office needs to keep some authority over it. So, by the way, in your answers, you'd be using everything from the scenario, saying, look, this has been tried years ago when there was lots of arguments, and then you say this, and then you say, right, now I'm going to explain the point. Divisional autonomy is good because it motivates, but head office needs to keep authority. Otherwise, things go wrong, like it did before when they started to draw their attention away from the day-to-day running. And of course, if you take too much autonomy away, it can start leading to demotivation. So can you see how this is actually quite easy? You need to remember ACE, and then you need to just go through each line in the scenario and apply ACE, or one of the A, C, or E, to it. But you'd be mentioning both in the exam. You'd be identifying from the scenario, and then you'd be explaining it in terms of ACE. So let's keep going. Hope you're still okay. So it said, in the end, this was the examiner giving it away really, head office intervened, but we suggested they should anyway because they should have some authority still, by instructing managers to abandon the proposal because it wasn't in our interest as a whole. So this is about goal congruence. And it said, and this is the bit you want to be mentioning in your exam as well, this decision by head office was also influenced to a small extent by a story that a competitor was fined by the tax authorities in J-land, Department J, for setting a low transfer price to reduce its profits earned in J-land, where tax rate is 25%, compared to T, where it's 20%. Now, you have a choice in the exam. You can either think, I don't know, the examiner's waffling on about tax, I'm going to ignore it because that isn't part of ACE, or you think to yourself, the examiner's waffling on about tax because he wants me to use it. So you think, right, okay, so the transfer price then, we need to get it right because we can't be fined by the authorities, can we? So nice and simple, really. So we know it's about congruent goals. Well, it doesn't really matter what it's about, to be honest, but this is what you should say. The transfer price should comply with tax regulations to avoid a fine. The examiner's given you that. But should we try and make the transfer price work in our favour? You know, so we've got congruent goals, so it's working in the business's favour as a whole by transferring more profits to the department with less tax, which is Department T. Of course we should. Okay, so maximise profit by setting a price which leads to more profits taxed in T land where there's a lower tax rate, but being careful that, you know, we're not breaking any rules in doing so, because the transfer price has to benefit the company as a whole, hence C, congruent goals. Okay, really nice and straightforward, isn't it, if you play your cards right? By the way, this is one of the worst answered questions in the December 24, unbelievably, because students didn't learn ACE, and even those that did said things like the autonomy means that everyone gets their own decisions, nonsense, and also they didn't use the scenario, which is crazy. So let's finish off the scenario then. It says the CFO believes that they should introduce a formal transfer pricing policy, and she's asked you to advise her on the criteria, which we've been doing. We said the criteria is ACE, autonomy, congruent goals, evaluation of performance. And this is a nice little paragraph that you get a conclusion you can always put in at the very end of every transfer pricing objective question. So just say, in practice, it'll be hard for any transfer pricing policy to satisfy all three aims. And you can mention ACE in there then, because they may conflict. In particular, the need to ensure the corporate profit, the congruent goals, and still retain divisional autonomy. Okay, so you say, look, there's no perfect transfer price. There's no perfect one that will do well on all the criteria, but we try and do the best we can. And when you're answering your question, you identify each point from the scenario, you apply your knowledge to it, and you sit back and you get loads of marks. There was one other point, because in another exhibit in the question was about directors' bonuses. And if directors' bonuses are around for Department J and Department T, obviously they're going to use transfer pricing to try and benefit from it. So there's a goal congruence issue there as well. But that would be enough to get 6 to 8 marks, which would be 100%. So that's that, my friends. How long did we take? 12 and a half minutes. Okay, I hope to see you all again at aCOWtancy.com. I hope to see you all again on a Lunchtime Live. If you do have any questions, though, drop me a question now. Let me see if I can see any. And there's no questions coming up, which is always a good sign for a lecturer when there's no questions. Okay, do drop them, though, in the comments if you so wish, or anything that you want to see in the future, and I'll try my best to get around to it. So in the meantime, have a lovely afternoon, and all the very best from me. Thank you very much.